Based on the historical data and forecast, Bitcoin shows a clear upward trend. The price has been consistently making higher highs and higher lows, and the forecast suggests continued growth. The RSI values fluctuate between 62 and 75, indicating neither extreme overbought nor oversold conditions. The Bollinger Bands have been expanding, suggesting increasing volatility and a potential for further price movement. Considering these factors, I propose a long position strategy. We will enter a long position at $120,900 on July 23, 2025. The stop loss will be set at $118,600, just below the recent low of $117,800 to protect against a potential pullback. The initial target price will be $125,800, aligning with the forecast price on July 28, 2025. To optimize the strategy, we will incorporate a dynamic trailing stop loss. Once the price reaches $125,800, we will move the stop loss to $123,100. If the price continues to rise, we will adjust the stop loss further, ensuring we lock in profits while allowing for continued gains. The final target price will be $126,600, based on the forecast for July 29, 2025. This strategy combines technical indicators and forecast data to maximize potential returns while minimizing risk. The RSI suggests we are not overbought, and the Bollinger Bands confirm the upward trend. This approach aims to capitalize on the bullish momentum while incorporating risk management techniques for a high-return investment. Based on the historical data and forecast, Ethereum shows a strong uptrend with consistent price increases. The RSI consistently remains above 70, indicating overbought conditions, but the price continues to climb, suggesting strong bullish momentum. The forecast for the next week predicts further increases, reaching $4,040. Considering these factors, I recommend a long position strategy. We will enter a long position at $3,780. The stop loss will be set at $3,740 to protect against a potential pullback. The initial target price will be $3,950, aligning with the forecast. To refine this strategy, we'll incorporate the Bollinger Bands. The price consistently trades near the upper band, confirming the uptrend. If the price touches the upper band at $3,970, we will move the stop loss to the center of the Bollinger Bands, which is $3,060, securing profits while allowing for continued upside potential. The final target price will be $4,040, based on the forecast. This layered approach combines RSI and Bollinger Bands to maximize potential returns while managing risk effectively. The portfolio will be 60% long position, 20% stop loss, and 20% target price. Based on the historical data and forecast, XRP shows a clear upward trend, with increasing prices over the past 2 weeks and a projected increase in the next week. The RSI consistently remained above 70, indicating overbought conditions, but the price continued to rise, suggesting a strong bullish momentum. The Bollinger Bands have been expanding, with the price consistently trading near the upper band, further confirming the upward trend. Given this analysis, I recommend a long position strategy. Entry price should be $3.86. To manage risk, set a stop-loss order at $3.7, which is slightly below the lower Bollinger Band. For the target price, aim for $4, anticipating a continuation of the upward trend. To refine the strategy, we will incorporate RSI signals. If the RSI dips below 30, consider a buy-in at $3.54, with a stop-loss at $3.4 and a target price of $3.8. This approach leverages potential pullbacks to enter the market at a more favorable price. Combining both strategies, the primary long position at $3.86 with a stop-loss at $3.7 and a target of $4, and a secondary buy-in opportunity at $3.54 if the RSI falls below 30 with a stop-loss at $3.4 and a target of $3.8, will maximize potential returns while mitigating risk. This blended strategy offers flexibility and adaptability to market fluctuations. Based on the historical data and forecast, Solana shows a clear uptrend. The price has consistently broken through resistance levels and the forecast indicates continued upward momentum. The RSI has been consistently above 50, and recently crossed above 80, suggesting an overbought condition, but the strong uptrend justifies a bullish strategy. I propose a long position strategy, entering at $200. The stop loss should be placed slightly below the recent support level at $196 to protect against a potential pullback. The initial target price is set at $232, aligning with the forecast high for the week. To refine this strategy, we'll incorporate the Bollinger Bands. The price consistently trades above the upper band, reinforcing the bullish outlook. Therefore, a secondary target can be established at $226, coinciding with the upper band. If the price reaches $226, consider taking partial profits and adjusting the stop loss to break even at $200. This approach balances maximizing profits with mitigating risk, capitalizing on the strong uptrend while protecting against unexpected reversals. The strategy combines RSI, Bollinger Bands, and forecast data for an efficient portfolio. Based on the historical data and forecast, BNB demonstrates a clear uptrend. The price has consistently been rising, supported by increasing RSI values and the Bollinger Bands expanding upwards. The RSI has recently crossed into overbought territory, fluctuating between 77 and 86, suggesting a potential pullback is possible, but the overall trend remains bullish. The forecast indicates continued upward momentum, with prices projected to reach $845. Therefore, I recommend a long position strategy, capitalizing on this upward trajectory. My proposed strategy involves entering a long position at $775, coinciding with the first day of the forecast. Given the recent overbought RSI, I will set a stop loss at $766, just below the recent low and the bottom of the Bollinger Band, to protect against a potential short-term correction. The initial target price will be $807, aligning with the forecast for the fifth day. If the price reaches $807, I will move the stop loss to the entry price of $775 to secure profits and potentially extend the target price to $833, based on the forecast for the sixth day. Finally, if the price continues to rise, I will adjust the stop loss accordingly, always prioritizing capital preservation while aiming to capture the full potential of this bullish trend. Based on the historical data and forecast, Dogecoin exhibits a clear upward trend with increasing momentum. The RSI consistently moved above 50, reaching levels above 80 in recent days, suggesting strong buying pressure. The forecast for the next week predicts continued price increases, with a potential peak around $0.314. Considering these factors, I propose a long position strategy focusing on capitalizing on the ongoing bullish momentum. We will implement a strategy that combines RSI, Bollinger Bands, and support/resistance levels to maximize potential returns while managing risk effectively. The entry price for this trade will be $0.268, coinciding with the initial forecast price and a relatively low level within the recent trading range. The stop loss will be set at $0.255, just below the lower Bollinger Band and providing a buffer against short-term pullbacks. The initial target price is $0.286, aligning with the forecast price for July 26, 2025, and near the recent resistance level. If the price reaches this target, we will reevaluate the situation and potentially extend the target to $0.308, based on the forecast for July 28, 2025. This strategy aims to capture a significant portion of the anticipated upward movement while minimizing potential losses through strategic stop-loss placement. Based on the historical data and forecast, Cardano demonstrates a clear uptrend. The price has consistently moved upwards, breaking through resistance levels and showing strong momentum. The RSI values have been largely above 50, indicating bullish sentiment, and recently reached overbought territory, suggesting a potential pullback before further gains. The forecast data projects continued upward movement, with prices expected to reach $0.984. Considering the support price of $0.818 and the recent overbought RSI, I recommend a strategic long position. The entry price for this long position should be $0.882, coinciding with the first forecast price and a slight pullback from the recent high. A stop loss should be placed just below the support level at $0.81 to limit potential losses. The initial target price is $0.956, aligning with the forecast data and providing a reasonable profit margin. If the price continues to rise and breaks above $0.956, the target price can be adjusted to $0.984, maximizing potential returns. This strategy combines trend analysis, RSI signals, and Bollinger Band's predictions for an optimized approach to capitalize on the anticipated upward movement of Cardano. Based on the historical data and forecast, TRON shows a slight upward trend. The RSI consistently remains above 60, indicating bullish momentum, with values nearing overbought territory, above 80, in recent days. The Bollinger Bands have been expanding, suggesting increased volatility and potential for price movement. The forecast data for the next week predicts a continuation of this upward trend, with prices hovering around $0.322 to $0.323. Given the current RSI nearing overbought levels and the forecast indicating continued upward momentum, I recommend a long position. We will enter a long position at $0.318. The stop loss will be set just below the support level at $0.314 to protect against a potential reversal. The initial target price will be $0.326, near the recent resistance level. If the price reaches $0.326, we will consider moving the stop loss to break even to secure profits. If the price continues to rise, we will set a second target price at $0.33. This strategy combines RSI and Bollinger Bands to capitalize on the existing upward trend while mitigating risk with strategic stop loss placement. Based on the historical data and forecast, Stellar shows a clear upward trend. The RSI consistently remained above 70, indicating overbought conditions, but the price continued to rise, suggesting strong bullish momentum. The forecast for the next week predicts continued upward movement, with prices potentially reaching $0.54. The support price of $0.276 provides a solid foundation, while the resistance at $0.503 has been tested and broken. Considering these factors, I recommend a long position with an entry price of $0.493. A stop loss should be placed just below the support level at $0.276 to protect against unexpected downturns, setting it at $0.27. The initial target price should be the recent resistance level of $0.503, aiming for a quick profit. To refine this strategy, we'll incorporate the Bollinger Bands. The price consistently traded above the upper band in recent days, confirming the overbought condition but also indicating strong bullish pressure. Given the forecast and the RSI readings, a second target price can be set at $0.54, aligning with the forecast. If the price breaks above $0.54, a third target price of $0.56 can be considered. This multi-tiered approach allows for capturing significant profits while managing risk effectively. The strategy combines trend analysis, RSI signals, and Bollinger Bands to maximize potential returns with defined entry, stop loss, and target prices. Based on the historical data and forecast, Sui shows a clear upward trend. The price has consistently tested and bounced off the support level of $3.49, while also making new highs. The RSI has generally remained above 50, indicating bullish momentum, although it has occasionally approached overbought levels. The Bollinger Bands have been expanding, suggesting increasing volatility and potential for further price movement. Considering the forecast for the next week, with prices predicted to reach $4.39, a bullish strategy is warranted. I recommend a long position with an entry price of $4.07. The stop loss should be set just below the support level at $3.49 to protect against a potential downside reversal. For the target price, I suggest $4.39, aligning with the highest forecast price. This strategy combines technical indicators and forecast data to maximize potential returns. We will utilize a combination of RSI and Bollinger Bands to manage the trade. If the RSI reaches 80, we will consider taking partial profits. If the price touches the upper Bollinger Band, we will also consider taking partial profits. This will help to secure gains and manage risk effectively. This approach balances risk and reward, aiming for high returns while protecting capital. Based on the historical data and forecast, reserve rights shows a clear upward trend. The price has been consistently approaching the resistance level of $0.00989 and the forecast suggests a continuation of this upward momentum, potentially reaching $0.0105. The RSI, though fluctuating, has generally remained above 50, indicating bullish sentiment. The Bollinger Bands are widening, suggesting increasing volatility and potential for further price movement. Considering these factors, I propose a long position strategy focusing on capitalizing on the anticipated upward trend. The entry price for this strategy will be $0.00977. The stop loss will be set slightly below the support level at $0.00914 to protect against unexpected downturns, setting it at $0.00900. The target price will be $0.0103, aligning with the forecast and providing a reasonable profit margin. This strategy combines technical indicators and forecast data to maximize potential returns while managing risk effectively. The portfolio will be 60% based on the forecast data, 30% based on the RSI and 10% based on the Bollinger Bands. Based on the historical data and forecast, Solana shows a clear uptrend. The price has consistently broken through resistance levels and the forecast indicates continued upward momentum. The RSI has been consistently above 50, and recently crossed above 80, suggesting an overbought condition, but the strong uptrend justifies a bullish strategy. I propose a long position strategy, entering at $200. The stop loss should be placed slightly below the recent support level at $196 to protect against a potential pullback. The initial target price is set at $232, aligning with the forecast high for the week. To refine this strategy, we'll incorporate the Bollinger Bands. The price consistently trades above the upper band, reinforcing the bullish outlook. Therefore, a secondary target can be established at $226, coinciding with the upper band. If the price reaches $226, consider taking partial profits and adjusting the stop loss to break even at $200. This approach balances maximizing profits with mitigating risk, capitalizing on the strong uptrend while protecting against unexpected reversals. The strategy combines RSI, Bollinger Bands, and forecast data for an efficient portfolio. Based on the historical data and forecast, Maple Finance exhibits a downtrend with significant volatility. The price has been fluctuating within a range between $0.416 and $0.494, with recent trading below the center of the Bollinger Bands, suggesting potential downward pressure. The RSI values have mostly remained below 50, indicating a bearish sentiment. The forecast for the next week projects a continued downtrend, with prices hovering around $0.42 to $0.45. Considering these factors, I recommend a short position with an entry price of $0.45. The stop loss should be set slightly above the recent resistance level at $0.494, specifically at $0.494 to avoid being triggered by short-term price fluctuations. The target price for this trade should be the support level of $0.416, reflecting the overall bearish trend and providing a reasonable profit margin. To refine this strategy, we can incorporate the RSI and Bollinger Band signals. When the RSI falls below 20, oversold, it suggests a potential bounce, but given the overall downtrend, we will not consider this as a buying opportunity. When the price touches the bottom of the Bollinger Bands, it indicates a potential rebound, but we will not consider this as a buying opportunity. The most efficient portfolio will be the short position strategy. Therefore, we will execute a short position at $0.45 with a stop loss at $0.494 and a target price of $0.416. This strategy aims to capitalize on the anticipated downtrend while mitigating potential losses with a well-defined stop loss level. Based on the historical data and forecast, Pendle exhibits an overall upward trend. The RSI consistently remained above 50, indicating bullish momentum, with values nearing 73 on July 22, 2025. The forecast predicts continued price increases, reaching $5.15 by July 29, 2025. Considering these factors, I recommend a long position. We will enter a long position at $4.7, with a stop-loss order placed at $4.5 to mitigate potential losses. The initial target price will be $5.05, aligning with the forecast high for July 29, 2025. To refine this strategy, we'll incorporate the Bollinger Bands. The price has been consistently trading above the upper band for the last few days, suggesting an overbought condition. However, given the strong upward trend, a pullback to the center of the Bollinger Bands, around $4.81, could present a more favorable entry point. We could adjust our entry price to $4.81, maintaining the $4.5 stop loss and increasing the target price to $5.15 to capture the full potential of the forecast. This combined RSI and Bollinger Bands approach offers a balanced strategy that leverages both momentum and volatility for high return potential. Based on the historical data and forecast, Ondo shows a clear upward trend. The price has been consistently increasing over the past 2 weeks, with the forecast indicating further gains. The RSI consistently remained above 50, and recently crossed 70, indicating strong bullish momentum. The Bollinger Bands have been expanding, confirming the increasing volatility and upward trend. We will implement a strategy focused on capitalizing on this momentum, primarily using a combination of trend following and RSI-based signals. Our strategy will involve entering long positions when the RSI falls below 60 and above 40, and the price touches the lower Bollinger Band. Given the current price of $1.15 on July 22, 2025, we will wait for a slight pullback. If the price retraces to $1.10 and the RSI is around 55, we will enter a long position at $1.10. The stop loss will be placed at $1.08, just below the recent low, to protect against potential downside risk. The initial target price will be $1.20, aligning with the forecast and the upper Bollinger Band. If the price reaches $1.20, we will move the stop loss to the entry price of $1.10 to secure profits and potentially extend the target price to $1.27, based on the forecast for July 29, 2025. This approach balances risk and reward, aiming for high returns while managing potential losses. Based on the historical data and forecast, Raydium exhibits a strong upward trend. The recent close prices have been consistently increasing, with the forecast predicting further gains over the next week, reaching a potential high of $3.98. The RSI consistently stays above 60, indicating bullish momentum, and the price is nearing the upper Bollinger Band, suggesting continued upward movement. Therefore, I recommend a long position strategy. We will enter a long position at $3.34. The stop loss will be set at $3.13, just below the support price, to mitigate potential losses. The initial target price will be $3.83, aligning with the forecast for July 26, 2025. To maximize returns, we will implement a dynamic target price strategy. Once the price reaches $3.83, we will move the stop loss to the entry price of $3.34, securing a profit. Subsequently, we will adjust the target price to $3.98, coinciding with the highest forecast price. This approach allows us to capitalize on the anticipated upward trend while effectively managing risk. The combination of technical indicators and forecast data suggests a high probability of success for this long position strategy, offering the potential for substantial returns. Based on the historical data and forecast, Bonk shows a clear upward trend. The RSI consistently remained above 65, indicating strong bullish momentum, with peaks nearing 86. The Bollinger Bands have been widening, suggesting increased volatility and potential for further price movement. The forecast for the next week predicts a continued climb, with prices reaching $0.0000436. Given this, I recommend a long position strategy. The entry price will be $0.0000371, coinciding with the start of the forecast period and a bounce from the lower Bollinger Band. The stop loss will be set at $0.0000352, just below the recent support level and the lower Bollinger Band, to limit potential losses. The initial target price will be $0.0000409, aligning with the midpoint of the forecast range. To maximize returns, we'll implement a dynamic target price strategy. If the price reaches $0.0000409, we'll move the stop loss to $0.0000388, securing profits while allowing for further upside. If the price continues to rise, the next target will be $0.0000422 and subsequently $0.0000436, the end of the forecast period. This approach combines the momentum indicated by the RSI and Bollinger Bands with the projected price increases, providing a robust strategy for high returns while managing risk through strategically placed stop-loss orders. Based on the historical data and forecast, Quant demonstrates a strong upward trend, particularly evident in the recent price surge to $134. The RSI consistently remains above 50, with values frequently exceeding 60 and peaking at 76.2, suggesting bullish momentum. Furthermore, the forecast anticipates continued price increases, reaching $149 by July 29, 2025. Considering these factors, I recommend a long position strategy. We should enter a long position at $128, placing a stop-loss order at $122, just below the established support level. The initial target price should be $145, aligning with the forecast high for the week. If the price reaches $145, we can adjust the stop-loss to break even to protect profits and consider a second target price of $149, based on the forecast. To refine this strategy, we'll incorporate the Bollinger Bands. The price consistently trades within the bands, indicating volatility. Given the upward trend, we should focus on breakouts above the upper Bollinger Band. If the price breaks above $126, which is the top of the band on July 22, 2025, we should enter a long position at $128. The stop-loss remains at $122. The first target price should be $145, and the second target price should be $149. This combined strategy leverages both momentum indicators and volatility bands to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Worldcoin shows a clear uptrend with consistent price increases. The RSI consistently moved above 50, indicating positive momentum, and recently reached overbought levels above 70, suggesting a potential pullback or consolidation. The Bollinger Bands have been expanding, indicating increasing volatility and upward price movement. Given the forecast prices are expected to continue increasing, I recommend a long position strategy. The entry price should be $1.28, coinciding with the first forecast price. A stop-loss should be placed at $1.24, just below the recent support level and the previous day's close price, to limit potential losses. The initial target price should be $1.49, aligning with the last forecast price. To refine the strategy, we'll incorporate RSI and Bollinger Band signals. When the RSI falls below 40, consider a buy signal. When the RSI exceeds 80, consider a sell signal. When the price touches the lower Bollinger Band, consider a buy signal. When the price touches the upper Bollinger Band, consider a sell signal. Combining these signals, if the RSI falls below 40 and the price touches the lower Bollinger Band, enter a long position at $1.28. Set a stop loss at $1.24 and a target price at $1.49. If the RSI exceeds 80 and the price touches the upper Bollinger Band, take profits at $1.49 and consider re-entering when the price retraces to the lower Bollinger Band and the RSI falls below 40. This combined strategy balances momentum and volatility signals for optimized returns. Based on the historical data and forecast, Pudgy Penguins demonstrates a strong upward trend, particularly evident in the recent price surge and the positive forecast for the coming week. The RSI consistently remained above 70 for a significant portion of the observed period, indicating overbought conditions, but the continued upward momentum suggests that the asset retains buying pressure. The Bollinger Bands have also widened, indicating increased volatility and potential for further price movement. Considering these factors, I recommend a long position strategy. We will enter a long position at $0.0377, coinciding with the first day of the forecast period. A stop-loss order will be placed at $0.035, just below the recent support level and the lower Bollinger Band, to limit potential losses. The initial target price will be $0.0469, aligning with the forecast high for the week and providing a reasonable profit margin. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 30 during the forecast period, indicating an oversold condition, we will hold the position. If the price touches the lower Bollinger Band, we will consider adding to our position. Conversely, if the RSI exceeds 80 and the price reaches the upper Bollinger Band, we will consider taking partial profits at $0.0449 and tightening the stop loss to $0.042. The final target price will be $0.0492, representing the highest forecast price for the week. This layered approach allows us to capitalize on the prevailing trend while mitigating risk and optimizing returns.